Get to John DeGoey's top picks. John, just to clarify now, these are not investments that you own yourself, and you don't own them in any funds you manage. So just clarify that for us, if you would, first.
That's exactly right, Andrew. There are a number of products that I'm using right now which are a little bit off the beaten path, and some of them are structured products and offering memorandum products given where we are in the cycle. And as a result, even though I think very highly of the three products I'm about to speak about, I don't currently use any of them. I think when the circumstances change somewhat, I intend to use all of them in the not too distant future.
That's a bit confusing, though. I mean, if they're top picks, why would you not be putting people into them right now?
Because some of the things I have right now, Andrew, are things that are sort of time sensitive and constrained in terms of having maturity dates and that sort of thing. So I can't get in until the other things play themselves out.
Okay. So, but these are things that you contemplate by recommending clients buy in the near future?
Exactly. These are all products that I expect to be using in the not too distant future. That's right.
Okay. Let's get to it then. Horizon's Resolve Adaptive Asset Allocation ETF, HRAA, in Toronto.
Adaptive asset allocation is the idea of trying to focus on the notion of risk parity and trying to minimize risk by not being too overly exposed to any one asset class. This is a product that will allow you to get access to not only stocks, bonds, and real estate, but also commodities, currencies. It offers a long-short option. It uses derivative products. And the idea is to manage risk. And this is going to be the theme for the things that we're talking about here at the end of the show. I'm looking for products that can get you a reasonable risk-adjusted return in all environments, but in particular in an environment where the markets are choppy.
Okay. And let's get to your next one. It's got quite the name, quite the handle. Franklin Clearbridge Sustainable Global Infrastructure Income Active ETF, FCII, in Toronto. Tell us what this one aims to do.
Yeah, I don't name them. I just recommend them. What we're looking at here is if you start thinking about what has happened with the Biden plan for the Inflation Reduction Act, there's been just a boatload, billions of dollars, a boatload of money being poured into infrastructure projects around the world. So there's a real impetus for moving toward this asset class. It's notoriously or famously recession-proof. We have to have infrastructure. We need to have our roads and sewers and what have you. And these things are often built with public funding, which are also inflation-proof. So you've got some built-in inflation protection. And this is the sort of thing where I think if you're a conservative investor, you're going to be well protected because the downside is way lower than it would be with other equity investments.
And finally, the Purpose Global Climate Opportunities ETF Fund, CLMT. Give us an idea, if you could, as to what this climate ETF holds.
Sure. It's a globally diversified product, as the name implies, and it has 5 different sort of main themes. And I don't know if I can remember all 5 of them, but they certainly include sustainable energy, green energy, and they have an ESG screen. So once again, there's no question that from a public policy perspective, governments around the world are moving, for better or worse, towards supporting a greener economy and cleaner energy. It's the sort of thing where there's always going to be money being put into these projects, and it's a best of breed sort of product that allows you to use multiple approaches to getting that greener economy from all over the world to get the diversification that will keep the risk down.
Yeah, it's fascinating. I suppose some people might say, well, it's a hedge if climate disruption cuts the value of your other stocks.
Yeah, I think that's a really good way of looking at it, Andrew. I don't think I wasn't thinking of it that way, but now that you mention it, I think it's a worthwhile concern. As you've heard me say a few times, I'm concerned about what the rest of the year has in store for us, and this kind of a hedge would actually buffer you fairly well against things going south.
Yeah, I mean, who knows? Mark Carney, the former Bank of Canada governor, now with Brookfield, former Bank of England governor, has emphasized that the financial markets are not fully taking the risk into account. That's
right, and I've read part of his book, Values, and he's Mr. Carney is a bright guy, and I tend to agree that the markets have not fully taken into account risk, and it's a whole manner of things. It's the melting of the ice caps, it's the thawing of the permafrost. People don't think about the billions of dollars that are being paid out in insurance claims when we have British Columbia burning to the ground. There's just a lot of things that are being down. It looks as though the Rhine River might be dry, and that will have impacts with regard to the price of food, but also shipping and supply chains. And the knockoff effects are substantial, and I don't think they're going away anytime.